All right, we are back with the MBS. That's Mortgage Bros Science. And as always, I wanted to go over the HP12C. All right, so everyone get your apps out. What we're going to do today is the classic F clear, G clear. This is going to reset any pre-marked input that might influence your calculations. So, let's say you're going to take out a loan. Shalom, I would like to take out a loan for $400,000. Okay? Present value. So $400,000 is your principal balance. That's PV, present value. Okay? And then, let's just say the interest rates, thanks to good old Iran, they're probably roughly 6.5 now. Actually, they've kind of been 6.5 since we've been talking for the past couple months. Right, I recommend doing the ARM, but you want to do a 30-year fix. You do 6.5 GI. Okay, the reason you do GI is because there are 12 months in a year, and with principal payments, okay, the interest compounds monthly. All right, so it's not compounding annually, it is monthly. So you see that blue 12 divided sign? G is dividing it by 12, albeit you could just divide your interest rate by 12, but this does it for you, okay? It's already macroed in there. And then amortization is N, and that is your term, all right? So you're going to go 30 G N, and you see that blue 12X there? That's multiplying 30 years by 12 because, again, 12 months in a year. So you have 360 is your term, okay? And then, quite easily, just payment. All right, so on $400,000 at 6.5 for 30 years or 360 months, you're gonna have a principal and interest payment of $2,528.27. All right, now, I know it says negative there, a simple input and output. All right, if you calculate future values of investments, you kind of understand this as well. All right, so you click CHS. That takes you to positive if you kind of have OCD and just don't want to see a negative sign in front of your payment. Albeit it kind of makes sense if you think about it, because that's $2,500 that you aren't going to have. So you're actually paying that, right? So it makes sense, but if you want to learn how to make it positive, all right? So let's do a quick reminder here. All right, remember, G clear, F clear. You can do F clear, G clear, all right? $400,000 is the mortgage you're taking out. Let's assume you're buying a $500,000 home. That's present value. All right. 6.5 GI, 30 GN. Remember, because interest compounds monthly and you're paying a monthly payment. So it's not one year. You're not making a payment once a year. You're making a payment once a month. Okay. And then the payment is 25, 28, 27. All right. Highly recommend getting your Kohl's Cash. Shout out Kohl's. And the HP12C app. If you are in college, if you're getting an MBA, if you like math, these things will probably run you like $80. And if you were a broke college kid like myself, I recommend downloading the app, because any finance course or a really basic accounting course, you're going to need a finance calculator, and this is exactly that, a finance calculator. So it can save you some coin. You know, you got to deal with an ad here and there, but, you know, it's pretty good stuff. All right? So stay tuned, because now I figure out how to record my voice on a screen recording on my cell phone. I'll probably be posting a lot more videos. All right? Thanks.